Hey everyone! Ready to see how Page Industries is doing with the festive season practically right around the corner?
Definitely. Always interesting to see how they're performing.
We're taking a deep dive into their Q2 FY25 results, and let me tell you, we're going way beyond just the headlines here.
Yeah, got to go deeper than that.
We've got their press release, of course,
Of course.
but we also pulled their investor presentation, ND,
Oh, nice.
the detailed financial statements filed with the Bombay Stock Exchange.
Now we're talking. Those financials are where the real story often is.
Exactly. So buckle up, folks. We're about to get into the nitty-gritty.
Love it. Let's piece together the full picture, not just the highlights everyone's talking about, and see if the reality actually matches the hype.
Right. Yeah. So the press release, they start off pretty strong, boasting an 11% revenue growth year on year for Q2
Not bad.
and a 29.9% jump in profit after tax, the PAT.
Okay, so for anyone who's not super familiar with all the financial terms, PAT is basically the company's net profit once all expenses and taxes are taken out.
Their bottom line, basically.
Exactly. And at a glance, yeah, 11% revenue growth, almost 30% PPAT growth. It seems like they're absolutely crushing it.
They do, don't they?
But got to remember, these numbers, they don't exist on their own, right? How does this quarter compare to Q1 of FY25, for example?
Good point.
What were the actual specific factors that are driving this growth?
Because a lot can be hidden in those overall percentages.
Exactly. Those are the questions we need answers to.
Speaking of growth, they also mentioned in the press release a 6.7% increase in sales volume, which works out to, get this, 55.2 million pieces sold.
Wow, 55.2 million. That's a lot of clothes.
It is. It's a lot of apparel out there in the market. And this actually ties in with what management's been saying about their focus on inventory health and operational efficiency.
Right, right. Makes you wonder, was this growth mainly because they sold more? Or did they adjust prices strategically? Or was it like a combo of both?
It's a good question. Now they're really celebrating their e-commerce success, claiming it's way exceeding their average for the brand. And they even highlight the impact of quick commerce. It seems like they're really riding that whole instant gratification wave.
Which is super hot right now, for sure. But here's where it gets a little tricky. Their financial statements. They don't actually break down revenue by channel.
Oh, so we don't actually know how much of that success is from online sales.
Precisely. And so that leads to another question. How does that lack of specific info affect their overall strategy? Especially since they mentioned facing subdued consumer demand. Are they going all in on e-commerce without really knowing the full picture?
That's a really good point. Okay, let's shift gears to margins. The press release, they credit those stable input costs.
Which every business wants right now.
Yeah, and improved operating efficiency for those boosted margins. Sounds like they've got a handle on their costs.
Sounds like it, but the financials tell a slightly more, nuanced story, I'd say. While raw material costs, those did decrease year on year, which is good.
Right.
Other expenses, like employee benefits, for example, those stayed pretty much the same.
Interesting. So are there maybe some hidden cost pressures that they're managing well, or is this like the calm before the storm?
That's what we have to figure out. Now, this next bid, this might be music to some shareholders' ears. Page Industries, they've already declared 2 interim dividends for FY25, and the total is a pretty hefty Rs. 550 per share.
That is substantial. Seems like their board is feeling optimistic, wouldn't you say?
It could be confidence, for sure, but it also makes you think about their capital allocation strategy. Are they putting shareholder returns ahead of other things like future investments? Maybe. Is that sustainable over the long haul? To really get what this dividend means, we got to compare it to their history, see how it stacks up against what's normal in their industry. Are they being super generous, or is this just how they've always done things?
To really understand those dividends, let's look closer at their overall strategy. Their investor presentation actually gives us a pretty good look at their manufacturing capabilities. They really highlight that strong in-house manufacturing setup.
Yeah, they definitely keep coming back to that point. They boast about 2.2 million square feet of manufacturing space.
Wow.
Across 16 units. And over 80% of their manufacturing is done in-house, which they say helps them keep those quality standards high.
Yeah, they even include this detailed map in the presentation showing where all their manufacturing units are. It's like they want to make it super clear that they're not just a brand, but a serious manufacturer too.
It makes sense strategically. If they're controlling a big chunk of that production process, they can maybe avoid some of the risks that come with outsourcing.
Especially with all the unpredictability in the world these days.
Exactly.
And it all goes back to that focus on operational efficiency, which they keep linking to those healthy margins.
Right, it's all connected. But while they're all about that operational strength, they're not ignoring market reach either. In fact, they're pretty proud of what they call their unmatched market coverage.
Yeah, they're not shy about the numbers. They report having almost 4,000 distributor accounts, presence in over 2,700 cities and towns. Get this. Over 107,000 points of sale in their retail network,
It's huge.
and over 1,300 exclusive brand stores.
That's a pretty impressive display. Got to give them that. Shows how they're dominating the Indian market.
Hmm.
And what I find interesting is they break it down further, their presence across different channels. So they've got the multi-brand outlets, those exclusive brand stores we talked about, key department stores, and of course all those e-commerce channels.
Right, right. And they're pushing their new product launches too. Joggers, track pants, oversized t-shirts and sweatshirts, the whole works. Like they're constantly innovating and expanding their product line.
Got to keep things fresh, right? Especially in apparel.
They even showcase some of their newest styles right there in the presentation.
Makes it visually appealing too.
It does. And it seems like they're really leveraging the power of digital and social media to reach their target audience. They make a point of highlighting their impressive social media reach across all the platforms.
It's a way to do it these days.
It really is. It's clear that they're adapting to the evolving world of retail. They're not just relying on those traditional brick-and-mortar stores anymore. They're actively engaging with consumers online and building a strong digital presence.
And as we talked about before, they're specifically calling out the success of that e-commerce channel, even though we don't have all the numbers.
Right, right.
So they're riding that wave of online shopping, quick commerce, trying to capture that segment that just keeps growing.
It's all about meeting the consumer where they are, isn't it?
100%. That's key for any business trying to survive, let alone thrive, in this crazy dynamic environment.
But let's step back for a sec. Look beyond just the numbers and the fancy marketing terms. What's the bigger picture, really?
Yeah, the bigger picture? What are we missing?
Page Industries, they're operating in an India that's changing fast. Consumer preferences are evolving, e-commerce is booming, and there's this increasing pressure to be sustainable, to be environmentally conscious.
That's a lot to handle, to balance all of that. It is, but they seem to be facing it head on. They're using operational efficiency, product innovation, and they clearly understand the market well.
It's also interesting that they're not shying away from talking about the current economic climate.
You're right. Their presentation actually acknowledges that subdued consumer demand in Q2. They point to things like those regional disruptions, the floods and protests that were happening.
Yeah, it does feel refreshingly honest.
It is. To see a company that's willing to talk about challenges directly and admit that external factors have an impact even on them.
It's a good reminder that even the most successful companies aren't operating in a vacuum.
Definitely not. They're part of a bigger, complex ecosystem, and they're subject to forces they can't always control.
And speaking of complex ecosystems, they spend a good chunk of their presentation talking about sustainability. They go into a lot of detail about responsible sourcing, efficient resource management, eco-friendly manufacturing processes.
Well, this is the hot topic right now. Every company's got to have a sustainability angle.
Right. They even talk about product stewardship, which basically means they're taking responsibility for the environmental impact of their products through their whole life cycle, from creation to disposal.
Sounds good on paper.
It does, but it makes you wonder, are they really walking the walk, or is this mostly just talk designed to make them look good?
Exactly. Are they really committed to doing good? Or is it just clever marketing to attract those consumers who care about the environment?
They do go a bit further and outline specific sustainability targets and milestones they've hit. Like, they say they've significantly reduced energy intensity and greenhouse gas emissions. They've implemented some serious water recycling initiatives, and they've got this goal to recycle a big chunk of their plastic packaging.
Okay, those are some measurable things at least.
They are. They also highlight all the different sustainability recognitions they received, like being certified with that integrated management system for quality, environment, health and safety, energy management, the whole shebang.
They even got that Golden Peacock Environment Management Award, right?
Yeah, they did. So they're making progress, it seems like. But is it driven by a real, genuine commitment? Or is it more about winning awards and attracting investors?
I guess that's the million-dollar question.
Yeah.
True sustainability, it goes beyond just getting accolades and putting out good marketing. It needs a change in mindset, a willingness to make tough choices that might not be good for profits in the short term.
All right, let's switch gears again for a minute and talk about those financials. The presentation really showcases their impressive track record: steady revenue growth, strong EBITDA and PAT margins over the past few years. It's all there.
EBITDA, just a reminder for anyone who's not a finance whiz, stands for earnings before interest, taxes, depreciation, and amortization. It's a way to see how profitable a company's core operations are, how much cash they're generating from their main business. And Page Industries, they're clearly making money.
They're not shy about showing off their strong balance sheet either. They point to their high return on net worth and return on capital employed, which have consistently been above 50% in recent years.
Pretty impressive.
It is. They also break down their working capital days, which basically tells you how well they're managing things like their receivables, inventory, and payables. A smaller number of days generally means they're more efficient.
So it's about finding that sweet spot, right?
Yeah.
Profitability, growth, financial stability, they need all of it.
And it looks like they're managing it pretty well.
They do seem to have a handle on things. What about those shareholder returns, though?
Oh, they're proud of those consistent dividend payouts. There's been a steady increase in dividends per share over the past few years.
Makes sense. Got to keep those investors happy.
They do. And they even give a detailed breakdown of their shareholding pattern, highlighting that diverse mix of investors who've put their trust and their money into Page Industries.
It all paints this picture of a company that's doing great, firing on all cylinders, as they say.
It does, doesn't it? But like with any company, we can't ignore the risks and challenges, right?
Of course not. No company's perfect. To their credit, they do acknowledge some of those risks in the presentation. They talk about things like earnings fluctuating, competition in the market, unpredictable economic conditions.
Yeah, the world's a volatile place these days.
It is. And even things like their ability to attract and retain talented people, that can be a risk too.
Because without the right people, the whole thing falls apart.
Exactly. They're not pretending to be invincible, which is good to see.
It is. It's a reminder for investors and analysts that you got to consider the full picture, the good and the bad, when you're evaluating a company. So we've covered a lot of ground here, but I have a feeling there's always more to the story than what's on the surface.
Always more to uncover.
We got to stay critical, keep asking those tough questions.
Absolutely. For example, while they talk a big game about ethical sourcing and employee well-being, what are they actually doing to make sure their supply chains are free from exploitation?
Yeah, good question. And while they're showcasing all these efforts to reduce their environmental footprint, what's their plan for tackling the growing problem of textile waste?
These are just a couple of examples, right? There's always more to dig into. We got to hold companies accountable and push them to do better, even when they seem to be doing well already.
So, with everything we've learned, what does this all mean for Page Industries' future? What's your take?
Well, they've clearly got a strong track record, their financials are solid, and they have a clear strategy for navigating this ever-changing retail world.
But it's not all smooth sailing.
Of course not. But they seem to be facing those challenges head-on, adapting their strategies, and putting money into areas like e-commerce and sustainability.
That upcoming festive season, though, that's going to be a real test for them.
Absolutely. It'll be interesting to see how consumer demand actually plays out and whether their optimistic outlook about capturing a big chunk of that festive spending is actually justified. Only time will tell.
We'll be watching. But one thing's for sure, Page Industries is a company to keep an eye on.
Definitely agree. How they perform in the next few quarters, that'll tell us a lot about whether they can handle this complex, dynamic Indian market.
So we've gone pretty deep into their Q2 FY25 results, looking at their financials, their strategies, their commitment to sustainability.
A lot of interesting insights, but as always, there's more to the story than meets the eye.
We encourage you to go check out those source documents yourself. The links are in the show notes. Take a look, analyze the data, come to your own conclusions.
Because making informed decisions, that requires understanding the whole picture.
You know, as we've been talking, I keep going back to how much they emphasize brand building. They talk about making their brand more visible, getting consumers more engaged, and investing in sales and marketing right at the point of sale.
It's a big part of their plan, for sure. In a market like India, where competition is fierce, having a strong brand identity is crucial if you want to succeed in the long run.
It's not just about selling products, it's about selling an experience, a lifestyle.
Right, it's about that emotional connection with the customer. They want to build a brand that people feel good about, a brand they trust and connect with personally.
Building loyalty that goes beyond just price and features.
Exactly. And that takes time. It takes consistent effort, strategic investments, and you got to understand your target audience inside and out.
So, as we wrap up our deep dive into Page Industries, what's the main takeaway for you?
For me, it's that Page Industries is a company that's not standing still. They're not satisfied with what they've already achieved. They're actively chasing growth, adapting to the changes in the market, and investing in the future.
They've got a vision, that's for sure.
They do. And while there are definitely challenges ahead, just like any company faces, they seem to have the right tools and strategies to handle them.
Their performance in the coming quarters, that's going to be really interesting to watch. Will consumer demand bounce back enough to prove them right? Will their sustainability efforts actually make a difference? How will they continue to innovate and stay ahead in such a competitive market?
Lots of questions still to be answered. But this deep dive, it's given us a better understanding of what's happening behind the scenes.
So, to our listeners out there, we encourage you to keep exploring those source documents yourselves. The links, as always, are in the show notes. Dig deeper, ask those questions, and draw your own conclusions.
Because in the end, the most valuable insights are often the ones you uncover yourself.
You know, as we've been going through all of this stuff about Page Industries, what really sticks with me is how much they emphasize operational efficiency. It's like the connecting thread, right? From
Yeah.
their in-house manufacturing to how carefully they manage inventory, it all comes back to efficiency.
It's definitely in their DNA, that's for sure. And it's probably a big reason why they've been able to maintain those impressive margins we were talking about earlier. Streamlining operations, minimizing waste, all that helps keep costs down and profits up.
Makes sense. But operational efficiency isn't just about cutting costs, right?
Oh, absolutely not. It's bigger than that.
It's got to be about making those processes better, improving quality, and in the end, giving the consumer a better product.
You got it. It's about doing more with less and doing it better. And these days, in this fast-paced business world, consumers, they expect a lot, and the competition is fierce. So being operationally efficient, that can be a real advantage over everyone else.
So they're betting on being the best at what they do, basically as a way to win in the long run.
Seems like it.
But could there be a downside to being so focused on efficiency? Could they be missing something?
That's a smart question. While efficiency is super important, no doubt if you take it too far, it can make you rigid, inflexible. Companies need to find that balance between being efficient and being able to adapt so they can react quickly when the market changes or when consumer demands shift.
So they need to be able to change directions fast
Yeah.
if they need to.
Exactly. So as we wrap up our deep dive into Page Industries, it feels like they're at a crossroads. They've got that proven track record, they're financially strong, and they're definitely all about operational efficiency. But they've also got some big challenges, like that subdued consumer demand we talked about, more competition, and that constant pressure to be sustainable.
It's a lot to juggle.
Oh, yeah. And then there's the wild card of the upcoming festive season. How they do over the next few months, that'll be a big sign of whether they can handle all this uncertainty.
So many moving parts. It's going to be really interesting to see how they play their strengths and deal with their weaknesses in the next few quarters. Will that focus on efficiency be enough to keep them growing? Will they be able to keep up with what consumers want and grab a bigger piece of that e-commerce pie? And maybe the biggest question, will all their talk about sustainability actually lead to real change, or is it mostly just for show?
Lots of questions to think about. But this deep dive, it's helped us understand what's really going on behind the curtain, wouldn't you say?
Definitely has. So to everyone listening out there, we encourage you to keep digging into those source documents yourselves. All the links are in the show notes. Explore, ask your own questions, and come to your own conclusions.
Because the best insights are often the ones we discover ourselves.
And on that note, we'll wrap up this deep dive into Page Industries. Thanks for joining us, and we'll see you next time for another deep dive into the world of business and finance.